Thursday morning. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world. It's been kind of a solid slalom week out there, just kind of markets kind of just existing. Well, we'll check on that here coming up with the Market Watch, stocks we're paying attention to, plus local and national stories that you need to know. And let's not delay it all. Let's get into it with that Market Watch. And everything is just there again today is what we're looking at. We did get some new inflation data today. The PPI, the Producer Price Index, out this morning. And a lot of AI technical stocks still weighing on the market, at least the NASDAQ here, as well as we've seen that throughout the week. But right now, the Dow Jones is up to 221 points, 53,987. The S&P 500 is up 59 points, 7803 for that. The NASDAQ, it's up 224 points to 26,813. Cisco being kind of the weigher downer there for that one. Then the Russell 2K, that small cap index, up 17 points to 3,066 here this morning. Bitcoin just kind of staying in that mid 63,000 level, 63,644 for Bitcoin here today as well. Stocks we're paying attention to right now, Tapestry is the first one we are going to look at. Tapestry is the parent company of big brands, expensive brands, I know they don't like that. Higher end brands, Coach, Kate Spade, for instance, are underneath the Tapestry label. They're down 15.18% here today. Underwhelming results for their fourth quarter results. Tapestry earned $1.32 per share. Its consensus was $1.28 per share. Revenue came in at $1.88 billion. Revenue just barely exceeded that 1.87 estimate level that was expected in that billion-dollar level there for Tapestry. They did increase its quarterly dividend. It went up to $46.25 per share. It was at, excuse me here, let me rephrase that. The dividend was 46 cents per share. Before it was at 40 cents per share for that. Let me get it right here. Went up, that's 6 cents per share there for the quarterly dividend. That's not helping the stock at all, though. 14.85% down right now for Tapestry out there. Next up, we're going to look at Yeti. Not a consumer brands out there. Yeti's down 11.37% as well. You know Yeti, right? Drinkware. They have the thermoses. They have the coolers that keep everything super cold or super hot for long periods of times. Well, they're down that 11.35% because they reported mixed second quarter results for them. They earned an adjusted 63 cents per share. The estimate was 54 cents per share. So good numbers there, right? Kind of blew those numbers out of the water. Yeah, the revenue, though, was the problem. $463.9 million is what they reported. Well, just barely above the $483.8 million estimate out there. And we say barely above it, I mean they tick just barely above that number. The investment community is not happy with that. 11% down here for Yeti Holdings here today. And then there's Birkenstock out there. This stock, people were kind of shoveling dirt on top of this stock about a year ago. And it's kind of done a nice rebound here as well. 16.30% up right now for Birkenstock. Now, they are, a London, a UK-based shoe company. You know Birkenstocks out there. Well, especially you hippies. You guys know it. 16.11% up because the quarterly revenue and adjusted earnings before EBITDA did beat expectations. Birkenstock said it expects its full-year revenue and adjusted EBITDA to come in at the high end of its prior guidance. Birkenstock having kind of a rebirth here as well here with their stock price because of the rebirth of their sales out there. When we come back later on and look at stocks, we're going to look at StubHub, Jack in the Box, and Red Robin, yum. All those stocks making waves today as well. We'll get into that. But first, we have some wholesale inflation reports out this morning. Of course, we're talking about the Producer Price Index, or PPI as we like to call it. And then wholesale costs for goods and services, they ended up being flat in July. We get all this reporting from this morning's Bureau of Labor Statistics report that came out, like I said, about 30 minutes ago. So the producer price index, well, it was unchanged for the month of July. Now that was below the 0.2% Dow Jones consensus estimate, and that's after falling 0.1% in June. The June figure was revived from a previously reported decline of 0.3%. So if you want to look at just core PPI, which of course excludes food and energy, it rose 0.2%. Well, the forecast was a 0.3% gain for the core PPI. Now, the core PPI does, excluding trade services, if you take trade services out of the core PPI, it increased 0.4% on that level, which means if you extrapolate that out on an annual basis, well, the headline PPI increased 4.7% for the all times index, 4.2% for the core as well. Now, those are unadjusted figures that I just gave you. Now, services, if we're going to specific categories, service prices, they rose 0.2% for the month. Well, the reason why that rose so much, 6.5% increase in portfolio management. Yeah. Now, that specific category, it could show outsized gains in the first month of the quarter because of reporting requirements, and that's what it did, 6.5% increase just in that services category. But if you want to look at other areas, good prices, they fell 0.7%, 3.1% decrease in energy under this PPI reporting, and then a 5.7% slide just in the gasoline index by itself. Food prices fell 0.9%. Core good prices rose 0.1% underneath that category. So another good inflation report for July, right? Consumer. Now, wholesale, which, if wholesale pricing is going up, folks, so's the consumer pricing most of the time. And we're seeing a cooling here, although it's still well above the Fed's 2% level. We're seeing a cooling of inflation with this reporting happening out there as well through these reports, at least for July. Now, does the encouraging inflation reports continue? Or does the August numbers, when we see them in September, do the August numbers kind of throw a wrinkle into it is kind of the question now. And then U.S. applications for unemployment benefits, they rose last week. But layoffs, even though we hear a lot of layoffs with big companies specifically, still at historically healthy levels. Now, the Labor Department gave us these numbers this morning. 209,000 people filed jobless claims last week. That was up from a revised 200,000 the week before, and it's higher than the 205,000 forecasters had expected. The 4-week average of applications, which you look at the 4-week because the week-to-week volatility goes away when you go look at a longer time period. It was unchanged at 199,000 as well. The overall number of people collecting unemployment benefits the week that ended August 1st, well, it dropped by 22,000, went to 1.78 million people. Claims for jobless benefits, well, it's a real-time number there of layoffs, or as close to a real-time as you can get. And they've been at a historically low range, about that 200,000 a week, between 200 and 230,000 a week for the past year. So if you have a job, well, you enjoy unusual job security out there right now. The U.S. employment rate is low at 4.1%. Now, the economy is proving resilient, even though that big, huge spike in energy prices this year, with the war in Iran, kind of spiked everything up and led some uncertainty. Companies are holding on to their employees, but they're also not willing to bring in new employees or expand roles right now as well. It's that typical, no hire, no fire economy that we've had for a long time now as well. So continued interesting developments, and then the inflation just being abnormally high, but coming down. No shocker here with the energy prices dropping as well. Hey, right? A lot of us are getting up there in age and, have to start paying attention to getting on Social Security or not. Some of you are already on it. Well, this time of year, we always get reports of what to expect for your COLA adjustments. Well, we got a new report kind of out on that as well. And if you're a Social Security beneficiary or somebody close to you, is, You're expected to see a larger cost of living adjustment as the image pops up on the screen in 2027. A bigger one than this year. But the you know the estimate is dropping because inflation is easing, as we just told you, with the CPI earlier this week and the PPI report today as well. So these numbers could come down even more. But by law, the annual Social Security COLA, I'm going to struggle with this story, folks. It's calculated using the Bureau of Labor Statistics Consumer Price Index inflation data for the months of July, August, and September. They use a whole mathematical thing. I'm going to make up words now that I don't understand, but they use those numbers and put it in a computer and it spits out a number. The COLA boosts beneficiaries' payments to account for a rise in the cost of living, and the COLA for 2026 came out at a 2.8% increase. So they are expecting a higher number from that, but with those July numbers being lower, it's not going to be as high as they once thought. Now, the BLS, the Bureau of Labor Statistics, released the July CPI inflation data. Of course, on Wednesday this week, that showed consumer prices were up 3.4% from a year ago. Now, that's from a 3.5% annual reading that happened in June. Several groups have released estimates for the 27 COLA based on the July data and estimates for the next 2 months of data. Obviously, some question marks for August and September, but they can at least estimate it out as well. And they think COLA will land in a range of 3.2 to 3.6% is what they are saying, kind of the estimate. Now, the Nonpartisan Committee for a Responsible Federal Budget, they released the lowest of those estimates. They projected the COLA will be about 3.2% when the final data is released this fall. Now, that means they're counting on the flat numbers in July and then, either flat or lowering numbers for the next 2 months to get to that 3.2%. Now, the AARP, obviously, they advocate for policies beneficial to people over the age of 50. They estimate that the 27 COLA will be 3.5%, and it's a first ever COLA estimate to be released before the third quarter inflation reports do come out. So 3.2, 3.5, start budgeting your increases there as well for those of you that are inside of that window. And another thing is here with the economy the way it is and pricing and inflation, we know people are using their credit cards more and more. We report on it here a lot here at McCollum on Business. Credit card balances, we know for sure, are rising to near record high levels. Yeah, the Federal Reserve Bank of New York new quarterly report on household debt and credit is out. It gives us these numbers. The report shows total household debt actually decreased by $13 billion in the second quarter of this year. It's at $18.8 trillion, by the way. Now, obviously covers everybody. Hopefully you aren't carrying $18.8 trillion worth of debt. But credit card balances, they rose by $21 billion. They're at $1.26 trillion cumulatively. That's a 1.7% increase from the previous quarter. And that's nearing last year's high of $1.28 trillion. Now, delinquency rates right now, they remain fairly stable, but people are holding balances with these high interest rates of 28, 30, 35% that credit cards are giving out right now. The percentage of credit card balances in late-stage delinquency, that would mean more than 90 days past due, they rose from 7.6%, and they're up to 12.8%. Between the third quarter of 2022 and the first quarter of this year, 2026. So we're starting to see some numbers trickle in here, but we do know for sure usage of credit cards is through the roof in this economy that we're facing right now. Let's pivot to some private company stuff out there. And we know the big trial started for Meta over in California against the states and, for the, the allegation at least of mental health for kids and how they've farmered their products, Instagram and Facebook, for kids to be addicted to them. Well, over in Australia, we've told you they've passed some laws that are being watched by everybody out there. And Meta came out and said early this morning that it has removed more than 750,000 Facebook and Instagram accounts that they suspect are belonging to Australians under the age of 16. Yeah. So Meta is stepping up enforcement of the Australia's social media age restriction laws that they've passed there. And it's all because, of course, regulatory action happening in Australia. The Facebook and Instagram owner, Meta, they deactivated 462,000 suspected underage Instagram accounts, another 294,000 Facebook accounts right before Australia's social media restrictions took effect in December. And then some more of that law took effect in June as well. So that's where you get the 756,000 accounts removed as well. And that's a substantial increase from figures disclosed in January that Meta put out then as well. They said then they'd taken down about 331,000 Instagram accounts and 173,000 Facebook accounts. Now, Meta has repeatedly said it intends to comply with the Australian legislation because even though they publicly opposed the approach taken by the government, they don't want the government telling them what to do. The latest figures arrive as Australia's internet regulator considers potential enforcement proceedings against all social media platforms, as well, including obviously Meta there as well. So they have the law here in the U.S., the lawsuits here in the U.S. and Australia. We know the EU is trying to crack down on them for underage reasons as well. We'll have to see where this continues to go. Other major platforms have not released compliance figures yet in Australia, about that same period. But Australian government data and several independent studies have indicated that more than 8 in 10 children under 16 continue to use social media during the first 3 months of the restrictions of that law. Australia's government introduced that legislation because of concerns, obviously, of potential effects of social media on the physical and mental well-being of children and younger teenagers. Now, the rules came into force on December 10th. More rules kind of went into effect in June as well, like tightening it up a little bit. Yeah. Now, the Australian approach here of the government laws, et cetera, are being closely watched internationally. Every government out there is considering how to approach this rules, introducing similar minimum age requirements for social media services out there and everything. And, I get it. The companies want them because it's more ad revenue for them, more revenue for them as well. But they're also fighting large lawsuits here in the U.S. and in the U.K. They're paying millions of dollars in fines. The business approaches, I guess, right, is what we are looking at. And this next story drives me nuts, folks. I'm going to try to get through it pretty hard. And it drives me nuts because life is hard, right? And you need to have some adversity in it. And not everything's going to go your way. And adults need to, you could do it compassionately, but adults need to kind of push kids to get out of their comfort zone and have a little bit of, a wall in front of them. Well, the University of Michigan disagrees with what I just said right there. Yeah, they're trying a new approach, for them at least. Other schools are doing it as well. I'll tell you about that in a second. But they want to curb the mental health crisis among college-age students. Yeah. So how are they doing that? Yeah. They're going to basically, freshmen's letter grades are not going to exist during their first semester of college. That's right. In the fall of 27, so next fall, this is only 2026. Students entering the university's College of Literature, Science, and the Arts, they'll receive pass or no credit marks on their transcripts in the first semester. They're not going to get letter grades, folks. Why? Well, their letter grades will be kept internally, but they're not going to tell the kids what they got. Yeah. The university says the pilot program, it's intended to ease academic pressure, helping freshmen adjust to the college and helping them start strong and curb the mental health crisis unfolding among college-age individuals. That's right, folks. They don't want a tough first semester to send students into a spiral or make them think a C or D has ruined their chances of a good GPA, graduate school, or even a job. Yeah. So let's baby them into giving them false hope about their future, right? The university also hopes the policy will encourage students to try harder subjects without worrying as much about grades, in their first semester. Obviously, some teaching and learning experts worry the change could demotivate freshmen or even add to grade inflation. Others see it as part of a bigger question about whether colleges are moving away from grading for excellence and they're just moving towards grading for competency instead of pushing kids to be the best they can be. You're being you is good enough. You don't need to be better. Now, similar policies do exist in other schools. MIT has this policy, by the way, right? Massachusetts Institute of Technology, one of the world-renowned schools. They have used a version of this for incoming freshmen since 1968. But after that, they do push their kids at MIT, right, to get to that level, and those kids are geniuses going in. But what are we doing? What are we doing with this stuff? It's okay, kids. Just come in, do as little as possible. We'll get you through this. I don't get what we're doing in this world. I'm not saying you have to be harsh to them. Make them work a little bit. Make them learn how to study. Make them learn, whether they've got it or not. College ain't for everybody. It's okay if kids drop out and move on to something else. It is. Let's figure it out, guys. Come on, Michigan. What are we doing? Hey, folks, when we come back here at McCollum on Business, we, of course, keep the show rolling. We'll look at the market watch again. Stocks we're paying attention to. I already told you. Red Robin, Jack in the Box, StubHub. Local story at a library, folks. When we have one of the world's, we have actually the world's best library out by my place. I have my HOA meetings out at this library. Yeah, been there multiple times, believe it or not. We'll talk about that award and some other things. Have big merger coming up in the home building side of things, and Domino's Pizza doing something they've never done before. We'll talk about that as well. So come on back. McCollum on Business, Thursday edition. And we're back here, McCollum on Business, here on this Thursday edition. Appreciate you joining me live here on the program. Don't forget, we are live here on YouTube. TME Media AZ is where you can find our programming. This show is live. The main event coming up 8 to 10. Uncle Lou joins us here on this Thursday. Big UFC fight, UFC 330 this weekend. He joins us at 9 o'clock hour. And, of course, for the first part of the show, me and 17-year NFL veteran Del Hellestree get you caught up on, well, unfortunately, Diamondbacks, Cardinals back in action. Preseason tonight as well in the NFL, and a lot of teams starting preseason tonight out there, and tomorrow and Saturday. We'll talk about all of that coming up live here on YouTube, 8 to 10. And, of course, if you can't catch our programs live, your boss is a slave driver, you get busy mornings, your Starbucks line is too long, and you're not able to pay as close attention as you want to here, well, of course, you can catch us on demand throughout the rest of the day on YouTube and over on Rumble as well. Rumble.com/user/TME Media is where you can find our programming. And over on Rumble, we have all of our shows, including the Pit Stop, on demand over there, as well as on YouTube. Well, on Rumble, though, you get The Real Matrix. That show is exclusive to Rumble. And, of course, the podcast systems out there. New episodes on Fridays at noon. Of course, 40 episodes are up right now, varying subjects. You can catch all of the replays on demand as you'd like over there on Rumble as well. Free podcast systems for all of our shows except for this one. Just go to Apple, Google, Spotify, Podbean, Podchaser. I'm forgetting probably a dozen of them out there. Your favorite podcast system, just search the show name, whether it be The Real Matrix, Angry Patriot, The Pit Stop with Steven. Of course, the Main Event with Steven or the Main Event with Dale. Those free podcasts do pop up for you. Catch the audio version. Like and subscribe to YouTube. Like and subscribe to Rumble. Like and subscribe to free podcast system, however you listen out there. We greatly appreciate it. Share us with your friends as well. Don't forget to follow TME Media AZ as well on X. That is our parent company, our company that produces all of this stuff. Let us know what we do. We do work for other entities that, we do the production side of it that they put out with shows, radios, big companies we work with out there. Kind of put all that out on TME Media, let you know what we do. We'd love to work with you. If you ever had an idea or want to get started on something, we can work with you to get it flowing, of course, out there. And we'd love to talk to you about that. And with all that said, though, we got to talk about this market watch. I made it sound all dramatic, but it's basically kind of where it was earlier as well, right? Encouraging inflation data that we talked about at the top of the show. And now the Dow Jones is up 251 points right now. The S&P 500 is up 69 points. NASDAQ's up 264 points as we look at it. The Russell 2K is up 18 points right now as well. So everything's positive with the encouraging inflation data. Oil prices have been steady these last several days as well. And then there's Bitcoin, right? Moving up a little today, but still in that upper middle range here, 63,737 for Bitcoin trading right now as well. Lots of news out there just around the inflation side. We kind of talked about that in the first segment. And that's all that's happening and that's affecting the markets. A lot of reporting happening out there, including big companies like StubHub is going to be our first stock we're looking at in this segment. And they're down 12.70% right now. You know StubHub, right? Secondary ticket markets charge you an astronomical amount of fees. Hey, I can buy 2 tickets for $159. Sweet. By the time you check out, it's $1,000, because of their fee structure. Yeah, that company. And they're down 12.47% right now. Adjusted gross margin for the second quarter came in at 82.2%. Folks, they make a gross margin of 82%. The market, though, was looking for 84.3% gross margin. Yeah. The company did reaffirm its full year outlook, though, for adjusted EBITDA. So they're still expecting a good overall year, but down right now at 12.53% for StubHub. And then let's get a little hungry here. And we're going to talk Domino's coming up, but let's look at Jack in the Box, first of all. They gained up 7.57% here today. Better than expected earnings for their fiscal third quarter. Jack in the Box earned 96 cents per share. The estimate out there was only 88 cents per share for Jack in the Box, and having some success on the fast food market, right? Wendy's is closing restaurants everywhere. Wendy's is struggling. They just got passed by Burger King, for the size of the restaurants out there. And Jack in the Box having some seriously good numbers as well going into that. And let's go to the restaurant side of food and talk Red Robin. Yum. 25.49. That's right, folks. 25.49% up right now for Red Robin Gourmet Burgers. Second quarter results, well, they beat analysts' expectations, as you can guess, with this huge uptick here on Red Robin. They earned 12 cents per share. The expectation, and then they had revenue of $277.6 million. The They expected them to break even on the revenue at $265.8 million, and they came in at $277.6 million. Red Robin's revenue through the roof, as you like to call it here, 24.14% up for gourmet burger site Red Robin with their plastic plates and their steak fries, which their steak fries are to die for. Ain't gonna lie to you about that at all, as I use the word ain't here on the program. Now let's get into, out by my place, out in Mesa. Mesa hasn't built a new library in 30 years. And middle of last year, end of last year, they opened up a new library. They call it the Gateway Public Library. It's out there by Eastmark area of Mesa, just east of the Mesa Gateway Airport, kind of an area off the 202. It opened in December of last year, and its very first year of operation, it's already been named the International Federation of Library Associations and the institution's James Bennett Public Library of the Year, folks. Whew. Those two entities awarded them the world's best new public library. The award aims to recognize excellence in public library design, innovation, and community impact. Also, they were selected from 19 different international entries representing 9 countries. Now, the newly built libraries that win this award, they're recognized as international benchmarks for accessibility, sustainability, flexibility, and even the user experience when you're inside. And it's not a huge library either. It's fairly small. But wins that award over there at Eastmark, and they're right there with the Eastmark Great Park. That's where it's at. They have a robot that comes up to you and talks to you. Robot will not shut up if it locks in on you. They're asking if you need help. They do have a robot there and everything, and yeah, we use one of the rooms there for our HOA meeting. So I'm in that library at least once a month going forward. It's nice little place. I'm not going to lie to you, out there as well. And like I said, you haven't built a library in 30 years. You might as well do it the best you can out there, right? And don't cut any corners and everything if you're only going to build them 30 years apart. Pay attention to that. Okay, 2 home builders are getting together here as well. And one called Dreamfinders Homes, Inc., and then Beezer Homes, which is a large one here with Valley Presence. Well, they've announced that they have entered into a definitive agreement. Dreamfinders will acquire Beezer in an all-cash transaction at an enterprise value of about $2.2 billion. Under the terms of that agreement, Beezer shareholders will receive $33.50 in cash for each share of Beezer common stock. So that basically comes out to price-to-book multiple of 0.8x is what you're looking at on those figures. The two companies, when they get together, will form the nation's 6th largest home builder in the country. The combined company will operate in 26 markets, approximately 520 active communities across the Southeast, Mid-Atlantic, Texas, and obviously out here in the West, where Beezer's is out here as well. They do have a little bit of a presence in the Midwest that's going to grow with this merger as well. And they operate in some of the highest demand corridors of houses throughout the country. These companies will as well. So big merger here in the home builder space. And now let's get into what you need. And my favorite part about this story before we start it, and we get it from USA today. That sounds weird. Is this. I like how Domino's, I'm going to read their press release. I like how Domino's is trying to tell us what a personal pan pizza is and why we should be excited. Like we don't know what one is, right? Because of their competitor having one since the dawning of time out there. But, right, no more arguing over what toppings to put on a pizza around your house. Domino's is releasing its first ever in the history of Domino's personal pizza in the United States. And it's coming at the end of August, folks. Yes. They're calling it the Domino. It's a rectangular Detroit-style pizza. It's going to be cut into 2 slices, made with the butter-flavored dough. It will make its nationwide debut on Monday, August 31st. So we're a couple weeks away, but it's coming. Customers who buy it can choose up to 3 toppings on it as well, according to Domino's press release. Here's what they said. This is where it kind of cracks me up. We know what a personal pizza is, Domino's. Here's what they said, quote, "The Domino does what traditional pizza can't. Now everyone can enjoy their own pizza with the toppings they want without having to sacrifice when sharing a meal with friends and family." That's what a personal pizza does. So Domino's says the menu price of a one-topping personal pizza is going to be $7.99. Obviously, that can vary, where franchises are, where the franchisees are, what cities, etc. But they're pricing it. Domino's is saying $7.99 is the range that it will be in as well. So, personal pan pizza coming from Domino's now, stepping it up as well. So don't forget, Domino's is in this rebirth, right? They redid their logo, their new boxes out there. They got that new jingle from Shabuzi for their sites as well. So there you go. Yeah. You can also get the Domino, as they call it, through the company's mix and match deal. I will say this. I do like how they made it square like a domino, a rectangle. I think that's fantastic. Great use of your company's name by having it be a rectangle out there as well. So it's pretty fascinating to see. So now, like I said, Detroit style crust here, so it's going to be a little bit different than the normal side as well. I just like the idea of the Domino's logo. That's just whoever came up with that's a genius. So it's not round, right? As well. So like I said, up to 3 toppings. Meaning it's normal pizza sauce and everything. You can customize them. They do say. As well. So they said during independent testing, customers who tasted the Domino rated it as, quote, "one of the most delicious products Domino's has ever introduced," unquote. Do you think so? Do you think that's what they said? Yeah. Now, some people, and of course the negative people, because, it's online and social media and keyboard warriors out there, a couple people were saying it gives them a frozen pizza vibe with the way it looks. Like a Stouffer's, remember Stouffer's back in the day and everything. But I think it's fantastic. August 31st, personal pizzas coming to you from Domino's coming up as well, coming your way. That's fantastic. Good for them. I like what Domino's is doing. Hey, folks, appreciate you joining us here, of course, on this Thursday edition. We got the main event coming up next year, live here on YouTube, 8 to 10 a.m. Catch us on demand as well. We will be back here tomorrow at 7 a.m. Ethan says, "My first time was to drop my ballot off at that library there." He said, "It looks so modern compared to the ones I see in old movies." All right, the young kid taking shots here, folks. That is right. Me and Ethan had to go in there. I showed him the robot when we walked in. See you tomorrow, everybody. Have a great Thursday night.